Here's one juicy one. So I wanted to buy one of these before they're like 80 or 150 grand.
Wow.
But it's massive. I mean, we're talking, I don't know what they are. They're like 50 or 65 pounds.
Ladies and gentlemen, you stack this stuff because you want to be prepared. Is there a possible way that you could get even more of this? Can we predict the future? Can we find out the hidden secrets of money? Let's get into it.
International Stacker.
Hey everybody, International Stacker here, and I have a very, very special guest. His name is Chris Vermeulen, and he is the Chief Market Strategist of the Technical Traders, and we are here to talk gold and silver, but he's going to bring a really unique spin on this and how he goes after gold and silver and collects it and what he does to try to see what's going to happen in the future so he can be more prepared. So we're going to have a very great conversation here, and let me turn it over. Chris, why don't you go ahead and introduce yourself, tell us who you are, what you do, and let's get into it.
Sure. Well, thanks for having me on the show, International Stacker. It's great to be here. So I am a technical analyst. I follow just the price charts using a bunch of indicators, cycle analysis, volume, sentiment, a lot of different things like that. But I take zero news. I don't take any potential manipulation into account because we really have no control over those things, and they're all you just can't control that stuff. So there's no point in tracking it, in my opinion. We'll touch on that later, I'm sure. But so I follow price action and where price is telling us it should go in the short term, from intraday charts to daily charts to weekly, monthly, and you can look long term to get an idea of what we should expect for gold prices and silver prices. And I love to try to accumulate, obviously, on cycle lows, maybe load up on breakouts. I mean, there's ways to accumulate and ways to trade it. And technical analysis makes it simple. You can filter out all the news, look at a chart, and within minutes, which you're going to see here, you can get a good idea of what to expect in price.
Yeah, and I like that you mentioned manipulation, because traditionally a lot of the stackers, and I consider myself a pretty hardcore stacker, we know manipulation occurs in the gold and silver market. It's a small market, spoofing and all these different things that occur. But I think sometimes because of that, people don't pay much attention to the markets except for the spot price. So I thought this would be very valuable to kind of throw in how you do what you do so people can understand it. And whether people decide to leverage the information and try to use it, is going to be up to them. But at least people can get an understanding of this type of thing. And I noticed your really cool accent. Tell everybody where you're coming from right now.
Sure. I'm about an hour and a half north of Toronto, Canada. So we like hockey, eh?
There you go. So the main reason I'm into gold and silver is a few reasons. My plan is to do it until I retire, unless I get a crazy opportunity to shift it into another asset before then. But I'm stacking for the long term to protect my wealth and as a hedge against inflation. And then if we were ever to have any type of economic issue, a way to get my wealth through to the other side, a way to not have your money inflated away, because basically with the fiat currency, it can just be printed into oblivion. So that's kind of why I stack gold and silver and kind of my mentality on that. Now, can you tell me, first off, just for everyone watching, you collect some physical gold and silver, is that correct?
Yeah, I collect a lot. I mean, I trade it for as ETFs, which is kind of paper metals for short-term gains. But I wouldn't really call myself a silver stacker. I guess I am because I own thousands and thousands of ounces.
Well, there you go. You're a stacker, man.
I'm a stacker. Yeah, I love it. That's the only way I think to hold it. And I think you and I have a very similar view because I see it as just like people buy insurance on your house. I see silver and metals in general as insurance on your financial outcome. And I have that kind of 10% of net wealth in metals, physical metals stored outside the banks and third-party vaults. Because if there is a problem with fiats, banking systems, you name it, when potential property values crater, the dollar or currencies crater, metals should go up 10x, if not more, and counter the losses on one side. And so at least at worst, I would hope we're still break even with net worth because the gold and silver hold you up. So I really I mean, this sounds crazy, but I really don't want to see $5,000 silver and, $150 or sorry, $150 silver and $5,000 gold, because that means we are in a really rough economy, tough times, I think. And that's kind of scary.
Yeah.
But if it goes there, I mean, we're protected because we own a ton of the stuff.
Right.
And that's something I think everyone should definitely have in place.
And that's what a lot of people don't get with this stuff. If it went to 500 or 300 or 150 an ounce, it doesn't
Yeah.
mean that this is worth any more. It just means that our paper currency is worth that much less. So, a lot of times I think
Yeah.
people can see that, and it kind of tricks them into thinking, oh, these are huge gains, when in reality, I mean, I think there is an opportunity for gains for sure, but I think a little bit tricky too when you're seeing that dollar price go up, but really it's because it's correcting for inflation.
Yeah. And the other aspect is, if we have that high of a value in metals, yeah, it might not be a very good lifestyle. Sure, you might have made some money, but I mean, who knows? I mean, if we see those levels,
They're going to be burning or something, right?
people are going to be shooting each other over silver rounds and bread and butter, right? It could be ugly. So, I mean, buy it as insurance. It's kind of that Hail Mary protection. It's peace of mind. That's the way I see it. And hopefully we can make a bunch of money and the economy doesn't completely collapse and all that stuff. But it's really critical to have this type of insurance plan.
Now, can you tell me why, in your opinion, why is technical analysis so important?
Well, the only way, I mean, when I started trading when I was 16 in high school, got hooked on it, and then traded through college, paid for my last year of college and everything else through trading. And I've kind of run the whole gauntlet. So I've done stocks, I've done options, I've done Forex, like currencies, futures. I kind of have done it all, learning to buy, PE ratios and good solid companies. And then I realized you go through a bear market and there's companies growing and growing, having killer returns, and the stock price keeps going down. And that was when I learned, I'm like, fundamentals really mean absolutely nothing. The only way we make money as an investor is to buy something low and sell it when it goes higher, which means price has to move in our favor. So I got hooked on John Murphy. He's like the technical analysis kind of god. And I read everything he had, and I realized, hey, if you follow price close enough, price and volume and cycles and all these things come into play, because people buy and sell like a school of fish turning in the water. They all seem to do it at the same time. When everyone's yelling, that's when it's time to go. When everyone's crying, that's when it's time to buy.
Right.
So I got into following price, and that's it. I filter everything out because I just want to know when price is moving up. When it's in an uptrend, it's more likely to continue trending than it is to reverse. So you buy it in an uptrend. When it shows signs of a reversal, you can trim profits off. You can move out of it and buy it back later on some type of pause or pullback, and keep your money kind of cash dry.
Well, I have some other questions planned for you, but we're going to put you to the John Murphy test. Would you mind pulling up silver and doing maybe a quick technical analysis for us at this point in time? And I'll say, at the time we're filming this, this is Tuesday morning of August 2020 at 7:20 a.m. Pacific Standard Time.
Sure. So this is the daily chart of silver. SI is the silver futures chart. And the candle bars obviously are the price, and I've got a 20-day moving average, which is the pink line. And I'll go into this. This is cycle analysis, this blue line. This is using a combination of the most active cycles in the market and then blending them together. So the two lows there are more or less, there's a long-term cycle that lasts, 1, 2, 3, 4 months. And so there's a big cycle that has a lot of heavy weighting on the price. And then there's a lot of smaller cycles. So the bias here is you want to be buying when the cycle is bottoming or trending higher, and then you want to be trimming or selling or just mentally prepared for a pullback or pause when the cycles are moving down. And so if we're just looking at silver here, I've got a couple lines drawing on this chart. And this blue line, this top blue line, is a major breakout level going way back in time. If we go way back over here, it's this significant high from 2016. So this to me, based on technical analysis, says if we break this level, this 2087, this $21 area, we're going to have a very explosive move to the upside, and silver will be in a new bull market. And that's what we saw. If we were to zoom in on the price action, we broke this line, and then that caused a whole bunch of short covering. People who are short silver, holding it down, manipulators, they got caught on the wrong side. They had to cover. JP Morgan had to do a huge delivery. We saw silver rocket higher to up to where we are now. So silver's in a new bull market. And you can use all kinds of price patterns like Fibonacci. I won't go into too many details, but if I was to take this tool and grab the low and measure up to this significant high and then down to this low and carry it forward to this low, if I draw on the chart, actually I'm not sure how to draw without my other tool. Here we go. So we've got, it's a little line. We've got this rally, you've got this pullback, and then it goes all the way up to this orange line. This orange line is 100% Fibonacci measured move. So based on this important pivot low to this pivot high at a resistance level and its pullback, it says this is the next target, 2450 area, and then we're going to run into some resistance, which it did. It had a hiccup there in price. And if we were to draw another Fibonacci extension, because this is the way it works, and I'll go back in time and show real quick here. But if we were to just take another pivot low where it really started to extend, we take this low, we go up to this high, and then back down to this low right here and carry it over, it says, hey, silver should be topping out at this orange line. We actually sold our silver trade right up here near the high. And then since then, silver crashed about 15%. Now it's bouncing up. So we've got this big price pattern starting to unfold. There is a bearish bias in silver, gold, and miners at this point. And if we were to just look at the cycle analysis, you can see we're looking at some pretty choppy times for silver going forward the next month and a half, 2 months, and potentially a pullback. Doesn't mean price is going to come down to here. It just means price is going to struggle, and then we could see it taper down into this. You never know. It could come all the way back down to test this breakout area. So we've had a nice run. We got out right near the top because it was a measured move, and now we're letting it kind of digest. And as it consolidates in a sideways pattern here, it's building a launch pad. If it can hold its ground all the way to the next cycle low, the next rally is going to be significant, and we can measure that. We can go from this low here.
And quick question, what do you mean by a bearish bias?
A bearish bias just means I expect it to go lower.
Okay.
So you got a bull market means higher prices, bear market means lower prices.
Right.
So a negative bias, lower prices, right? So based on this price pattern, if silver can get traction over the next month and a half, this chart is really hard to see for you guys. This isn't my normal charting, but the upside is $36 if over the next couple months. Right. So that's where I'm looking for the next major resistance level for silver. So 36 is going to be really key, and that's one thing we really want to watch for. So let me just pull up the weekly chart here.
And I think that's one thing that people don't necessarily understand, that sideways movement, that consolidation, or even pullbacks as the market continues to move is actually healthy for silver versus just a parabolic move that never stops. Is that correct?
Yeah. Sideways patterns and pullbacks are very, very good. When you're in an uptrend, you don't want something to go straight up, because what goes straight up comes straight back down. If you go back in time in silver and you look back over here in 2006, it went straight up, it came straight back down. Another parabolic move, it went straight up, pretty much came straight back down. You really don't want these because it's a short-term gain, and then it gives it most of it back, or it can be a very big topping sign.
And then
if we're
people off too, right? If it goes up and crashes, they're like, I'm never getting into silver again.
Yeah, there's a lot of damage. I mean, a lot of people are still, well, now they're not suffering so much, but man, people really had to hold out a long time to get back to profits with their gold and silver. I mean, so many people get sucked in right at the top. it's just like the Bitcoin bubble a few years ago in December. I mean, it was every TV channel had ads, radio. People where I was at a resort were all talking about it. They were all buying Bitcoin, and then it tanked. And silver and metals kind of have that vibe right now on a short-term basis. I am super bullish on metals long-term. I do feel like we're going to see weakness as the stock market starts to put in a major top and starts to correct. I think we could see silver and gold do very similar to what we saw in 2008 over here. We saw gold and silver rally up just before the bear market in equities. They become a leader, and that's what they're doing right now. If you look at the hard right edge here, they have become a leader. And when the stock market corrects, almost all asset classes get pulled down with it, and that's what we saw. We saw silver pull back with the bear market, but once that bear market's close to an end, that's when we see the big move in silver. So I think next year is when we're going to actually see the big move in metals. I think we need a bear market in equities. We need this recession to kind of cleanse itself out. We haven't seen it yet in the stock market. That's going to hold silver and gold back, which is perfectly fine. Believe it or not, this pattern that's been forming over the last 10 years, if silver trades sideways for 6, 8, 12 months, it will be a major bull flag, very similar to what we saw over here in 2009, 2010. And then that's when we go into one of these ballistic kind of moves higher, which I'm predicting somewhere up in the $80 for silver. That's looking further out.
Right.
But there's huge potential in silver. And I mean, I bought a bunch of 1,000-ounce bars a few months ago because I was like, oh my gosh, you're looking at this breakout about to happen. I'm like, I've always wanted to own some 1,000-ounce bars.
Me too, man. And you did it, man. How can you pick?
I know. I'm like, if I don't buy an $18,000 bar right now, it's going to cost me $80,000, which is like 110,000 Canadian. I was like, I'll never buy one if it's that expensive. So I bought a few, and it's just,
man, that's epic.
it's really cool. But I think there's huge upside potential. It's just a waiting game now for that ballistic move going forward.
Cool. Well, thanks for running us through that. That was actually super interesting. I think especially for a lot of the viewers who maybe aren't into technical analysis. And what's interesting is, I know you said you don't track the manipulation really because it's manipulated and there's nothing we can do about it. However, when you're running through technical analysis, is there moves in the market that you're like, okay, well, that was obviously some sort of can you tell if it's been manipulated, or do they do a good job hiding that?
That's the thing about the financial markets. You can think and feel, and it can look really manipulated, but you can't really prove it, right? I mean, a lot of times you'll be watching critical price levels, and you'll see the market push up really quick past this level, and you see all the shorts have to cover, and then the price gets hammered. And and that happens in small cap stocks all the time, which is market maker manipulation. So it happens in metals, but you can't really prove it. I can't point a finger and do that. And I mean, I've got a trading system here where this is the chart of silver. This is the 30-minute chart. This is just kind of zooming in. And so it tells me when the bars are green that the trend is up on a short-term technical standpoint. And what we're looking for is a cycle low. We want to buy on dips, and we're looking for a lime green area, which puts the market, actually the price, into a short-term oversold territory where bargain hunters tend to step into the market. And usually within 1 or 2 days, the market bounces and rebounds. So that's kind of, not that you guys are that short-term, but these are like opportunities that if you're a stacker and you want to buy more, you just have to wait. Usually once or twice a month, we'll see this oversold territory. You can go and you can quickly buy some silver, and by the time it arrives, it's probably going to be, higher in value by 3, 4, 5%. So it's really nice, these short-term cycles and these moves. And technical analysis is great because it works on any time frame. You can do monthly, you can do weekly, daily, right down to the minute or tick chart, depending on how quick and how small or big the gains you want. So technical analysis is really amazing when you've got it dialed in and you understand how to read the charts for accumulating.
Now, let me ask you a question. And back in back in what was it? I think it was July. When we first saw the pop up, I think silver went to like 24, then it was back down to 22, jumping around in there. And I had said that I was waiting for a significant pullback. I was hoping for, at that time, the high teens. And then I changed that a few videos later to, well, I'm hoping at least we can get to 20. And my philosophy on that really had nothing to do with technical analysis. I mean, I looked at the charts and whatnot, but I felt like with the next wave of stimulus, which is like, this is the biggest stimulus in history, and they're just printing money like nothing. I was expecting some sort of pullback to be attached to the release of the next stimulus money. So I've been actually holding on buying physical silver unless I found some crazy deals. I'm hoping for that pullback. And since I made that video, it went up to near 30, then it pulled into like the 25, then it bounced back up, then it pulled down this last big pullback again. So my question to you, like, do you think my thinking is sound in that it might, I'm looking at the social issues and the governmental issues more than I was technical analysis? Do you think I'm on a fool's errand? Do you think there is going to be some sort of pullback? I mean, what do you think about my current strategy?
Yeah, I mean, your gut's right. I think most people kind of feel that with all the unrest going on and the printing and all the BS going on, it's just crazy that metals have to do well. Now, the thing is, gold is the biggest kind of true safe haven in terms of if you go to an average Joe or investor anywhere in the world and they say, hey, if you don't want to buy bonds because there's no income, and you don't want to buy stocks because you think we're in a recession, the next thing they're going to say is, well, I'll buy gold. And it's still very rare for the majority of people to even want gold, but they go to gold. Silver really doesn't cross the average Joe's mind at all. And that's why gold has led the way. Gold broke out 13 months ago into a bull market. We've been riding that wave all the way up, and it's been incredible. Silver is almost always a laggard. And so silver is now starting to break out, which is really exciting. So I think gold, in terms of holding its value, if we go into a correction, is going to hold up better than silver on a percentage-wise. Right. Silver could still have a pretty deep percentage correction, should be short-lived. Gold will hold up more just because countries and individuals are now starting to see gold as an asset now because it's outperforming, and advisors are starting to get them to move into it. So I think buying on pullbacks is obviously the play. Gold's in a bull market. Silver is now in a bull market as of only just like really a month and a half ago. So these are fresh opportunities. Pauses and pullbacks are good for the price and good to buy more.
Now, I think I'm going to ask you if you can pull up the gold chart and run us through that. But while you're doing that, for physical stacking yourself, are you more focused on stacking gold? Are you more focused on stacking silver? Or do you have a ratio you buy at, like a certain amount of gold for every ounce of silver or whatever?
I definitely am more heavily weighted in silver.
Woo! You're my favorite.
Yeah. Yeah, I mean, I'm younger. I can take more risk. It's got lots of explosive personality, the silver price. So I probably have 65% silver and the balance in gold. I still want quite a bit of gold. I was 50-50 for a while, but I'm like, yeah. I mean, gold's pretty slow and boring. Silver's got the explosive moves. So I started adding some silver there. But yeah, I like silver, but you definitely need to, I think, own some gold because you never know what asset is going to actually move. As a trader, we've always seen gold mining stocks move first, right. And then gold follows, and then silver. And the market always has a way of throwing everybody off their game. Gold broke out a year early, and then miners struggled to break out, and then silver. And you just never know which one is going to go to the moon, right? If somebody comes out with a gold-backed currency of some sort, that could send gold through the roof. Everybody piles into it. Right. If somebody does a silver one, silver could go through the roof. But it's always kind of what you least expect. So I think you need to have both. You'd hate to watch one take off without you. Right. So you need to have enough in there so that if it does, you can be like, you know what? At least I got some and I'm riding that wave. Right. So that's the way I see it. It got to be a little diversified in that kind of spectrum.
Right. And, working in my job field, emergency management disasters, like we always plan for the most ridiculous things possible because you need to have a plan. But I think the one thing we can agree about 2020, it's been a complete dumpster fire and it's so unpredictable. Who knows? Like, I would not be shocked if a country came out with a gold back currency. Like, who knows what could happen over the next couple of years?
I know. I think somebody will. It might not take off and be like a global currency because you'd need, so many warehouses full of this stuff.
Yeah.
But I mean, I think somebody's going to come out with it, and I think it'll do fairly well. And I think that could spark a massive rally. I mean, if silver jumps to $100 or $200 an ounce, I could see silver potentially becoming a silverback. But it's just so heavy; you need so much of it. It makes it probably a little harder to carry as a mega currency. But I mean, I don't know. That's not my field of expertise, but
Did you say
I would love
mega?
to see a gold backed or silver backed currency.
Did you say mega?
Jamaica? No.
No, you said mega, and that's funny because on the upcoming Mega Gaw, I'm giving away this kilo of silver to one of the
Nice.
viewers. So that is going to be mega. I'm having a great time on this video here. So let's jump into these gold charts, Chris. Tell us what you got.
Sure. Gold, let me full screen it here. This is the weekly chart. I'm going to zoom way out. And so gold's got a bunch of these lines. Major resistance level for gold was right over here at 1385, 1380, somewhere in here. And anyways, that was the level that this multi-year, it's called a stage one basing formation. And usually commodities take 5 to 10 years to base. Commodities just, they can underperform for a ridiculously long time. And they do that because it really just has to bore the heck out of people, and they have to give up. When somebody gives up on an asset, that's when it puts in a bottom. And so that's kind of what we saw. Everybody gave up on it. I think people moved to Bitcoin, a bunch of other things. So if we start to zoom into the price, you can see this breakout zone, very similar to how silver moves. Once it breaks out, you see volume start to pick up, like in the bottom. You start to see price pick up and expand, and it pulls back and it expands. This was the coronavirus kind of hiccup, forced liquidation with margin calls, and then it recovered, formed a nice bull flag, which is an upward bias, expecting higher prices, and now it's rallied up. We had a target at 1967 to the 2000 mark, and of course it tagged that and has pierced through it. Now it's pulling back, and now it's stuck in under this 2000 mark. And more or less, if we look at the kind of short-term cycle analysis for gold, this doesn't mean gold is coming down here. Don't look at the price and think all this means is price is going to be out of favor, and it could trade sideways up here, or it could trade sideways and lower until there's a major cycle low. And if you look back on the chart, say over here, it showed this huge pullback on cycles. Well, it doesn't mean price is going to fall. It just means it's out of favor for a while. And all we see is a sideways kind of lower price action, which is very bullish. So this is what we're looking for now. It's had a beautiful run. Seems like everyone's piled into gold. Gold and silver are like headline news. And now we're probably going to see it fizzle out of favor, taper down maybe 1900, maybe 1800 again, which is going to just set up an amazing opportunity because we can draw Fibonacci target lines, which would point to much higher prices. I mean, if we were to throw a rough target from the March low, which is a significant high volume standout low, to this high, and say it comes down to 1800, I can squish this chart, and the chart is saying the next stop after this consolidation in potentially a month and a half, 2 months, we could see 24.39 in gold, roughly. So that's kind of the upside potential in gold. Now, if the US equities markets, stocks, do start to crash, I think we're going to see gold and silver pull back, and it might go a little bit deeper. But as long as it stays above these two blue lines at the bottom, we're still in a full-out bull market. And this pullback is just forced selling. It's panic, people moving to cash, liquidating positions, just pulling price down, and eventually it'll recoil and take off and launch. So that's kind of where we see gold going. I mean, if we were to look back, I wanted to do this with silver also, but if you look back more or less, we've broken to new highs. So we've got this beautiful area where gold could flag all the way down to roughly this 1800 area, which if you come across here, it's these 3-4 significant highs, which is going to act as a support zone.
Right.
So if it flags all the way down to 1800, it is going to be a massive bull flag that, you know, you could actually go from the significant low down here, way down here, go to this high, and then say it comes down to this 1800 support level. I mean, we're looking bigger picture now. We're looking at 2700 would be the next. So depending on how this market corrects, where it corrects to, I mean, the bigger this flag is, the further back we can tag it to the bottom of this pole. This is the pole, and then it flags out like a flag waving. That is called a bull flag. And so whatever this run up is the same run up you'd have from the bottom of the flag going higher, which is that 2700. So there's a lot of upside in silver and gold. I don't think it's here right now. I think we just saw the big run. So I know we're all excited and we're feeling like $1 million with all of our metals, but
right.
We're probably going to go through a few months of weakness. But just know the longer it trades sideways and holds up, the better the outcome is later this year or next year for it.
Well, you know, and this is really interesting because you come at it from a total technical analysis, data-driven viewpoint. And I come at it from a vignette or a lens of, you know, what I deal with daily, like geopolitics and that type of thing. And, you know, I definitely see value in technical analysis, whether the markets are manipulated or not. So, you know, maybe I'll start to try to tie my viewpoints with or tether it with some technical analysis as well to have maybe a more informed or well-rounded picture. Obviously, none of us are fortune tellers. We don't know what's going to happen for sure. But I think it's definitely useful to it's an arrow in the quiver, I guess, right?
For sure. I mean, trading is one of the toughest businesses in the world. Like, we're literally trying to predict the future, which we know. I mean, you can be right more often than you're wrong, but I mean, it's impossible to be 100% right. So the nice thing about technical analysis, it puts the odds in your favor. The shorter the time frame you pick, usually the more accurate it is. So when you look at the big picture stuff, I mean, they do work out, but they take months or years to unfold. So it's not that exciting versus short term. You get in and trade something, catch a nice move, and trade it again. So it's definitely a good arrow in the quiver to help you know when you should be looking to buy, when you should be looking to maybe trim some positions if you're a trader or if you're a silver stacker. The big thing about technical analysis, like right now, how the markets, I think, are kind of hitting a high for metals, is to just mentally know, you know what, I'm expecting 2 months of sideways or lower prices. And that's actually a good thing, because if the price keeps rallying straight to $36 from here, sure, it looks great short term, but it's going to give it all back later. So you might as well take the slow road that's safe and it's stable versus the roller coaster ride. And you really just don't want big spikes on charts because they're not sustainable.
Well, now that we're talking about predictions, that's my next question for you, actually. What is, now, ladies and gentlemen, this is a prediction. It doesn't mean it's going to be right, okay? So you take it with some tablespoon of salt. But what's your prediction for the price of silver in 2020? Personally, I've been saying I think it can break $50, but that's based on my geopolitical viewpoint. What do you think from your viewpoint it could hit in 2020?
Silver. So I think it's going to max out around 35, 36, which is that Fibonacci measured move I drew on this chart a little while ago. Then the interesting thing with Fibonacci is that moves always seem to match previous support and resistance areas. So if I go over here to 36, 35 area and draw that line, if you go back in time, you can see it was a significant high here. It was a major washout high here where people piled in and then big sellers stepped in and crushed the price. It got close to it here and fell. And then we had a bunch of big volatility pivoting. It paused here, it rocketed higher, fell back down, found support. So there's a lot of volume and it's a standout pivot high. I mean, I'd love to see it get to 40 or 50, but it's got a lot of resistance around that 36. And based on this previous March low move, that is where 36 is going to be resistance. So not only is it Fibonacci herd mentality, but it's also previous level where big sellers who have bought back here are going to, if it gets there, they're going to say, you know what, I'm going to break even and get out of this, this
Right.
8-year nightmare. So that's the problem, is there's going to be resistance. So I think 36 could be the high this year. I do think it's going to go a lot higher eventually, but I think that's going to be pushing the limit, unless there's some type of big catastrophe with a currency or banking that could spike things. But 36 is kind of the target.
I think the key here too is, guys, ladies and gentlemen, we're talking spot price. So in physical gold, if it hits 30, or silver, if it hits 36, I mean, with the premium, we could be in the 40s, or, who knows? I mean,
for sure.
I saw a $12 premium on American Silver Eagles. That's crazy.
Well, that's the other thing, and I've never really brought it up, but it's funny because you watch, I deal with traders and we trade silver and things like that, and just by buying silver at the right time on an oversold dip when it's selling off and the premiums they're very little premiums and no one really wants it, you're buying silver at a killer deal, spot, silver rounds and silver bars. And then when it takes off and rallies and say it does go to our 80 or 150 level, I mean, the premiums are probably going to be ridiculous. And you're probably going to make an extra 10 to 30 or 40% on premiums at those levels, right? I mean, it could just be ballistic, and it'd be really tough to beat those type of earnings. So physicals, if you can deliver it, I mean, you're going to get extra return on it than just the spot prices here.
I think that might be why some stackers are kind of disenchanted on the whole market technical analysis side of it, because they see the spot price, but in reality, they're like, well, I'm not buying silver at that spot price. It's like 20% more with these crazy premiums,
Yeah, I know, it's wild, and I focus on. I mean, you collect a lot different than I do, so you've got all those really cool design silver stuff. I mean, it looks awesome. I just keep it very, very kind of institutionalized, where I'm like, I just buy silver brand rounds and bars. That's it. I don't want to pay anything for like a premium for anything rare. I just kind of want, give me an ounce at the best price. I find, the lowest price possible. So we have a different strategy there. You've got amazing collectible stuff and old coins from all around the world, which is so cool. I mean, I would love to go through them and just think about back in those times, people trading those and using them. Just incredible.
Yeah, the stuff is pretty cool. And here's the key, though. I am kind of a man after your own heart, because I am all about getting as cheap as I can and finding the deals. So right now, my physical silver stack's a little over 6,000 ounces. And my dollar cost average, even with all this crazy collectible stuff, is $18.36 currently.
Yeah, it's amazing. It's amazing.
So I think one of my final questions for you here is going to be, do you have any advice or alerts or warnings for people? I know there's a lot of new people getting in the market, seeing it go high, hyper. There's a lot of FOMO, fear of missing out. Do you have anything to tell people or any advice?
Yeah, I run a newsletter at the technicaltraders.com, and what I do is I analyze these charts live every day in the morning around 9 o'clock. I send it out before the opening bell so everyone can get a feel for what's going to happen today. Really, I recap what happened yesterday, what's happening in overnight and pre-market trading, and then what to expect today and looking forward 1 or 2 weeks. So I update that every day. So you always have a feel of, is today going to be resistance on something? Are we going to see a big move? Or if there is a big move, what does it mean? Is there going to be more of that? Or is this kind of an exhaustion end of a trend move? So I cover all this, and in silver and gold, I cover every day in great detail, because a lot of my followers, really, I started as the gold and oil guy. So gold and oil are kind of in my blood. So that's my core trading. And so I give out trade alerts. I say, this is when to buy silver. I mean, we bought silver about a week and a half ago or 2 weeks ago. We caught a quick 13% move in a couple of days. We got out on that rally, and now we're looking for the market to reset for a new opportunity. So any buy signal that I give can be bought with, for a silver stacker as well, because those are usually points where it's either oversold and about to rally, or it's breaking out and it's about to extend and go even further. So they're really critical points, and I try not to get involved when something is topping, just like on the silver chart. When
Right.
we look on this weekly chart, it's showing we've got potentially several weeks here of a topping price, and then several months of sideways to lower. Cycles, they vary depending on the time frame. This is a weekly. The daily chart showed more of the squiggle lines. So yeah, I provide that insight, and it's nice to know what to expect so that you're not shocked. And that was a big thing of what I was providing during the March crash. Is people were like, oh, if I didn't have your videos to kind of hold our hand, because I explained like this is perfectly normal. When we have market crashes and bear markets, we see prices fall 5 or 10% a day. I mean, it happens, and it's just part of trading. But people think the sky's falling, which it's not true. It's just another market downturn, and they rarely happen. So people get shocked and panicked. And the videos kind of walk you through that don't worry about it. This is just a shake, and things will stabilize and recover.
So essentially, knowledge is power. And by having knowledge, whether it's through technical analysis or geopolitics or however you get that information, is going to be that tether to help keep you to the ground so you don't panic or FOMO or sell your entire position or buy at the top. So I get what you're saying, and that makes total sense. So if people wanted to check out your newsletter or check out, I know you have a YouTube channel, and I'll edit it in the link to your YouTube channel on the screen right now. But how can people find your content? How can they find you?
Right. So I'm here at thetechnicaltraders.com. And if you want to get a taste for things, I've got a blog here for free research. Oops. And then I provide 3 different types of service of technical analysis. So I've got the really slow technical investor. So somebody who wants something that's really low cost. It'll keep them in the loop with the markets. They'll know when stocks are in a bull market, in a bear market, when to own gold, silver, miners. And of course, it's something that has 1 to 3 signals per year. Very slow, great for if you wanted to accumulate metals, or when to start maybe trimming some off, which won't be for years. And then we've got a more active trading newsletter, which is swing trading ETFs using my band system, which is the best asset now, which currently is silver. So we have a few more trades a month. And then I've got more of a longer term kind of advisor style service where you just trade long the SP 500 or bonds. You're either in one or the other, or cash, very slow. The average trade lasts about 40 days. So we've kind of got you all covered depending on the time frame you're looking at. But if you go to the free research, you can go down and see. We've been talking about the dollar, a lot of different stuff. There's tons of good content. We just did a really good one, a detailed 2021 price forecast for gold and silver. You name it, we got all kinds of stuff on the markets, all free. You can follow along and get all this juicy details we just kind of talked about. We pretty much post something every day, and every week a few of them are on gold or silver. So lots of information there for free.
Right, and I'm happy you do have some free resources, because people have all different types of budgets, and I know there's people out there stacking that save up and literally buy like 1 silver dime a week or a silver dime every 2 weeks or a month. So it's really cool. You have free content. I also want to push your YouTube channel out there. I see you do post videos. It's pretty active. So ladies and gentlemen, check out his YouTube as well. That's a nice free resource. And anything you want to say about your YouTube channel?
I really just started sharing some more interesting content on there, which just going over the technicals in more short form. So very short, quick videos on like one sector, whether it's metals, miners, the indexes. So every now and then I throw a little gold nugget out and say, check this out. We got a major turning point. I like to share some really interesting, insightful price patterns that are unfolding that you can watch live. So it's kind of like our paid service. But you actually get to get it for free. But I don't post too many of those, but it's real eye-opener to see this stuff happen live. Like I post it, and then over the next few days, you watch these moves play out.
Right.
So it's really educational and kind of gives you some insight, the power of technical analysis.
And you know what I would love to see on your channel? Maybe put up a video one of these days with some of your physical gold and silver, and maybe talk a little bit about like the physical metals and why you're stacking physical as well as trading. And I think that'd be a cool dichotomy or comparison compared to the normal content. And I think you might get a lot more silver stackers looking into technical analysis, and vice versa. You might get a lot of people who just do, trading to be like, maybe some physical will be valuable as well.
Yeah. Check this out.
Oh, okay. Here we go. Oh,
mama. Here's one juicy one. So I wanted to buy one of these before they're like 80 or 150 grand.
Wow.
But it's massive. I mean, we're talking, I don't know what they are. They're like 50 or 65 pounds. Oh, I almost broke the floor.
That thing
anyway,
is massive, man. Wow.
Yeah, they're cool. I just got them in. They're on their way out to go into storage. But I can't get enough of them. They're just so cool. It's addicting.
How do you get 1,000-ounce bars? Do you have to buy from a wholesaler or something, or?
No, you can buy them at most of the sites. I mean, they're pretty much always sold out. So I was listening to Eric Sprott, and I mean, there's a big silver shortage. He's starting to have companies contact him, like Mint, saying, "Can we buy some of your 1,000-ounce bars?" And he's like, "No way in hell am I getting rid of any of my silver." And I'm like, you know what? I've got all this. I got 1 ounce, 10 ounce, kilos, 100 ounce, lots of those, a big mix, because you never know what size you want to sell off or which ones will have the best bang for the buck when the time comes. And then I'm like, you know what? I need to get a 1,000-ounce bar of silver, because if there is total chaos, I want to be one of those guys and be like, hey, I got silver. I got 1,000-ounce bars for industrial use, and you can sell them off and get a huge chunk of money. So I was like, you know what? I'm going to just cover that industrial side, and I'll just take some silver 1,000-ounce bars, and in case they need to feed them into their machine and spit out 1,000 rounds.
You just ruined me. Now I have to get a 1,000-ounce bar. That thing was epic, man.
It is heavy.
Well,
yeah, it's pretty wild.
I appreciate you having you on. I had a great time talking with you. I'm super happy you're into physical as well. And thank you so much. And I'll let you close out the video. Anything final you want to say to everybody?
I think we covered it all. I just if you haven't looked at technicals, I mean, I think you should take a look at them, just because it gives you insight as to where the markets are going, and just follow some of our free research, because I think it really opened your eyes to know what's coming and what to expect. And if there's any rough times, we're going to write about it and tell you how good it actually is for price. I actually want to see price pull back and consolidate, because I'd like to buy some more silver before it takes off for the next major launch, which is that $36 range and change and beyond. So,
woo! Let's see it, and let's stack it to the sky.
All right, catch you on the next one.
Woo!
One stacker on a journey.